Welcome to World of DaaS, a show for data enthusiasts. I'm your host, Warren Hoffman, CEO of SafeGraph and GP of Flex Capital. For more conversations, videos, and transcripts, visit safegraph.com/podcasts. Hello, fellow data nerds. My guest today is Packy McCormick. Packy is the writer of Not Boring, a Web3 and startup newsletter which has over 150,000 subscribers. He's also an investor at Not Boring Capital, and I'm a big fan of his newsletter. Packy, welcome to World of DaaS.
Thank you. Great to be here.
I'm excited. All right. Now, one of the kind of the big recurring theme of your work at Not Boring is that you're a committed optimist. And as we're recording this, in October 2022, what do you think optimism is in the tech landscape?
Yeah, that's a really good question. And I think probably there's confusion on definitions. I think when people think optimism, they think dumb optimism or blind optimism, or just like you think that things are just automatically going to go well. And that's not the definition that we're using. We're kind of using the definition that knowledge is power, and we're kind of continually acquiring knowledge, and all problems can be solved given enough time and energy and resources and focus. And I think one of the reasons that I've kind of doubled down on focusing on optimism is that I think it's a mindset that is almost self-perpetuating, where if more people are optimistic and think problems can be solved, then more work can go into solving those problems. So if you look at things right now, obviously there's a war happening, recession either here or on the horizon. Everyone's portfolio is not looking as good as it was looking last year. So by the traditional definition, optimism looks kind of dumb right now. But then if you look around, I mean, not to be too just, whatever the current thing is, but what's happening in AI right now is just absolutely fascinating. I think that's a ton of fun. I think it's been really interesting to see what's happened on the energy side of things when kind of the rubber hit the road and people are like, oh, wow, actually energy is kind of at the base of everything. And so now more time and effort going into renewables, more pragmatic approaches to traditional energy sources. So I think a lot of interesting stuff happening there. I think what's happening in biotech has been absolutely fascinating. Kind of the combination of AI and biotech is really cool. So I think there's a lot on the health side coming. And on the Web3 side, obviously maybe the worst spot to be optimistic right now, given everything that's happened, but I'm seeing a lot of genuinely fun and useful products that are coming out right now that feel like the kind of things that can only be built in a bear market or that can only emerge in a bear market. So I'm excited about what's coming there as well.
Now, the average smart person you meet is generally more of a pessimist because they can see the problems and stuff. But when you think of a founder, it's kind of the joint of being both smart and optimistic, right? Which is somewhat of a rare join. How do we encourage more smart people to be optimistic so that they go out and found companies, et cetera?
That's a question that I'm kind of fighting with and wrestling with every day and trying to kind of bring into practice. And I think one, just general, more optimistic storytelling. When you read sci-fi, as many smart people have pointed out, it's pretty dystopian, and I don't think the world's going to be that bad. I think it removes, it transports you to the future and then removes all human agency in the interim, where people do have the opportunity to opt into a lot of new things. And
most movies about the future are also dystopian too.
Exactly. And it assumes that we're not going to make choices that are in our best self-interest all the way up until the year 2200, and then we're stuck in this awful world. Whereas if a product is great and it makes our lives better, we're going to use it. If it's not, we're not going to use it unless, there's some authoritarianism wins and we have to do whatever the government says. But I think for the most part, it's overly dystopian. So one is just storytelling. The other is facts. I mean, if you read the news, or even I think one of the things that triggered this optimism kick for me was reading Wired, which I used to read as this very optimistic publication. And 90% of the headlines on there pretty pessimistic or pretty here's what's wrong with everything going on. And so I think
in the 90s when I started reading Wired, it was the future, and then it got pretty pessimistic. And even in San Francisco, where I used to live, it used to be you'd run into someone and they were always about this optimistic future. And then at some point over the last few years, it turned and they were maybe they were talking about legitimate problems like the environment or social media and stuff, but it got very pessimistic very, very quickly.
Totally. And so what we're trying to do, I mean, I'm writing this thing, The Weekly Dose of Optimism now. It's just like 5 links to things that people are doing or humans have accomplished over the past week. And like the amount of progress that we're making every week is pretty unbelievable. And then you zoom out and you look at a decade ago or what the next decade is going to look like. And I think if you focus on those facts and like the actual things happening, as opposed to just saying like, the world's going to be good, like, trust me, I think that's going to be helpful as well. So I hope more people focus on that stuff. And I hope to prove that like it can actually be good business to write about that kind of
Now,
stuff.
how do you think like there's like the Peter Thiel, Tyler Cowen argument that the rate of progress is slowing, and the rate of progress was really big, let's say at the first half of the 20th century, and then maybe starting in the 70s, it started slowing dramatically. Like, how do you think about that?
Yeah, I think so. I read this book, Where's My Flying Car by J. Storrs Hall, and he talks about a lot of this. And the premise of the book is actually sci-fi used to be a little bit more optimistic in the 30s, 40s, 50s. People were projecting flying cars. They were projecting all of these great kind of physical innovations that would make our lives better. And then the physical stuff just kind of stopped. He had this unbelievable chart that I linked to in one of my pieces that showed that essentially like if an innovation that was predicted back then required a certain amount of energy. Above that threshold, those innovations from those predictions from sci-fi just did not come true. And below, so like,
so it's like an
you know,
energy problem essentially
that's, I mean, like it's a many, many things problem. And he talks about a bunch in the book, but I think like if you go back to like the basis level, maybe it's an energy problem. And so more cheap energy, as opposed to saying like, how do we slow innovation down? How do we slow the economy down? How do we do degrowth? I think if you throw a lot more energy at the problem, it makes a lot of those things possible. And I think now there's, you know, the potential for the combination of AI and cheaper energy and what's happening in material science, like all these things coming together, where I think we're going to be at a spot where both digital and physical are going to be moving pretty quickly at the same time. And I think that'll hopefully move the progress bar back up in a way that Tyler Cowen and Peter Thiel will be happy with.
There's a tension sometimes between like safety and progress. And if you go like full on progress, you have all this, you know, you might be polluting the environment. You have all these crazy people dying. You have all these other types of things happening. And let's say that's like the 20s and 30s or something. And then, but on the other side, if you go like full on safety, like we can't get like, if you're worried about any airplane ever crashing or any building ever falling or any, you know, or anything ever polluting or something like that, then you could really stunt progress. Like, how do we get that tension right?
Oh man, that is a question for someone smarter and more involved in the sausage making than I mean, you're seeing it now with autonomous vehicles and full self-driving, that there are car crashes every day and millions of people die in car accidents. And then one car accident happens with a self-driving car and it's the end of the world.
Would you agree we're too far on the safety side right now in society? We got to move more on the progress side, or
100%. I mean, I think that's true in a lot of areas. I wrote this piece earlier this year about that kind of on even the investment and ownership side of things, that in the Web3 world, like if you wanted to just give somebody ownership in a DAO, that's illegal. And I think that even on the financial side, like the SEC is very, very focused on protecting people and not as focused on figuring out how to get more people invested in the markets. Like half of the country is actually invested. And so you're not going to catch up with your labor alone as opposed to labor plus investing. And so even there, let alone safety and permitting and all of that kind of, like, I think in all aspects, we're almost in as a country, this like innovator's dilemma thing where some countries are going to come and just like kind of break some of the rules more and maybe move a little bit faster. Obviously we have huge advantages in geography and natural resources and all of that, but it does feel like we're trying to protect a lead and trying to protect people a little more than trying to innovate on the regulatory side. Some of it's just, we've been around for a while.
Even on that side, like none of it makes sense. It's like, you can invest. This is super complicated option that like nobody understands. It's like, you know, third derivative or something, but you can't invest in a normal equity in a startup, right? So it doesn't it doesn't make sense. Like I would never invest in these like complicated options that like the average like, you know, HODL person invested or something.
Trust me, I made that mistake.
Startups is a pretty simple thing to do.
Totally. I made that mistake after I left. I worked in finance for a few years in the beginning of my career. And so you couldn't really trade anything. You had to hold everything for 30 days. And so as soon as I left and that restriction was off, I was like, oh my God, this is amazing. I'm going to trade options. This is going to be so much fun. And I got my face ripped off. And I had worked in finance. Like, it is really complex. And the fact that you're able to click a button in Robinhood and you're like, I think it's going to go up. And then
Yeah.
you can buy an option, but you can't invest in startups is wild to me.
It's crazy. Yeah. All right. Well, one thing you've said, which I give you a lot of credit for, is you said you probably would have written a very positive article about Theranos a few years ago. Like, how do you balance this like optimism and realism?
Yeah. I mean, I think, and I probably will write about this at some point, but I think that everybody has their double-edged sword. Mine is certainly optimism, where, I think one of the approaches might be spending a lot of my time focusing on realism and trying to red team my positions and all of that. The way that I'm choosing to handle it is just to hire and work with smart people around me who actually know what they're talking about. I mean, like my challenge is both the optimism, and then I'm excited about such a wide range of things that I'm not an expert in, that I could easily just get overexcited by any particular implementation of that thing without understanding the science or the tech behind it super deeply. And so, for example, I hired, I'm working with this guy, Elliot Hirschberg, who is kind of working on all things tech bio and biotech for us. And he's getting his PhD in Stanford in genomics right now. And he's deep in the science and the research. And so I'll bring something to him and be like, this is really cool. Like, this seems like it could change the world. And he's like, no, that science is terrible. And so I think that's what would have happened with Theranos. I think actually now with Elliot on the team, maybe we wouldn't have invested in Theranos, but that's how I'm trying to handle it, as opposed to like really trying to change myself. I'm trying to bring in people who can kind of complement and balance me.
And how do you like, I find this also, I have this kind of optimism bias. I always find myself when investing, like falling in love with the entrepreneur. I just feel like, oh my gosh. And they tell the story, and they've got also a great life story. And I just want to give them money.
Yeah.
And, maybe it's not the best way to like, actually, especially if you're investing other people's money to be an investor.
Yeah. I mean, I think part of that is repetition, right? Like, I can only get excited by so many founders, like really, really excited by so many founders' story. And so one of the ways that I approach that is just thinking about them kind of relative to each other, and really, now thinking like, all right, if I have $1 million pot, am I going to give a tenth of it to this person, or do I want to give twice as much to that other person? So it's like, instead of being like, who am I optimistic about and who am I pessimistic about? It's more like, who am I more optimistic about? I guess is how I trick myself into making those decisions. But yeah, I mean, like I'll angel invest sometimes in something where I'm like, I don't see the business case here, but I love the story and I love the person, but I can't invest other people's money in this thing. So I'll just angel invest here.
All right. That makes sense. What do you think? Like, if you're an optimist, in some ways you're going to get scammed more, right? Is there like like an ideal scam rate that some should be shooting for? If you think of Walmart, like they have an ideal shrinkage rate, because they don't want to be like frisking everyone when they leave the store or something. Like, this would be a terrible experience. So they're like, oh, okay, we'll lose, let's say 1 or 2% or something like that on the shrinkage rate. Do you have like an ideal scam rate do you think about?
I don't think about it. I mean, I think the ideal scam rate when it's like an ethical or more moral scam is 0%. And like, you really want to figure out, if the person,
if it's 0, then maybe you're not moving fast enough in investments, or, et cetera. As you said, like maybe you would have invested in Theranos. Now, if you put 100% of your assets into that, it's terrible. But if you put, 0.5%, 1% of your assets, like there's some ideal scam rate to have. I don't know. Or would you agree?
Yeah, I don't know what it is, but you're right. Like, I've stated publicly that my diligence process, because I'm not writing feed checks, is not nearly as deep as other people, and I'm moving faster and all of that. And so I'm certainly going to miss some things. And I definitely put a lot of trust in the investors that I work with who are leading a lot of these rounds to do a lot of the background checks. There's Jeffrey Morris Jr., chapter 1, has said, I think he tweeted about this the other day, that like whenever he's actually done reference checks, it's talked him out of more good investments than bad investments. And so there's like a real fine balance there. I don't know what the right percent there is, but it's a tough thing to get right. And I'm not going to lose sleep over it. I just don't want to be involved in anything that's like hurting people or going to damage my reputation in a real way. And so that's why I say 0%, but certainly things are going to fall
Well,
through the
if you
cracks.
think of Theranos, so like Rupert Murdoch famously wrote $100 million check into Theranos and lost it all. And of course, he got the tax write-off, but lost it all. And he's worth at least 100 times that. He's worth at least $10 billion. So he invested, let's say, 1% of his money. He lost the money, like no big deal. Like my guess is, and he probably didn't do that much due diligence, but my guess is like he's invested $100 million in a bunch of other things that did extremely well
Totally.
over the years. And so, and he wants, well, part of his advantage is he can move with speed and he can move with conviction. And so if he spent like all the time doing due diligence on Theranos, yes, he wouldn't have invested, he wouldn't have lost his money, but he probably also wouldn't have made the billions of other dollars that he's made with the other deals he's done.
Totally. The losing money part, I'm totally, I think I've done a bad job if I don't lose money on at least 30-40% of the investments that we make. It's just like, if you can figure out that there's something fishy, I think if the actual risks to people are high, if things go wrong, it's worth spending a little bit more time on diligence. But yeah, I agree with you that there's going to be a bunch of investment. I'm not being weird enough if there's not a bunch of investments that just don't work because they're too early or something happens that the investment doesn't work out.
Okay, let's talk about crypto. I know you're super interested in crypto, all things Web3. Like how big of a threat do you think are the whales to the crypto ecosystem?
It's a good question. I haven't thought a ton about how big a threat the whales are to the ecosystem. Like if you look at most of the big, really disastrous things that happened in the last run were opacity and kind of these CeFi institutions. There was Luna. Vitalik Buterin was on the Ezra Klein podcast talking about the fact that really there were a lot of very smart people, and I'm not one of them because I'm not spending time like digging in and saying like, here's the bear case for this thing. But it's like a lot of smart people called out that Luna just economically didn't work and it was going to fall apart at some point. And so there are a lot of things that I think just like structurally people got overexcited about in a bull market and didn't do the work. That
I'm one of them. I put some money. I put some money into Luna. I just thought it sounded cool. I also have full disclosure, I have a dog named Luna. So when I saw who I love, and so when I saw this Luna thing, I'm like, I have to invest in this. I'm like, I've got, I love my dog. It was just like a terrible idea. Luckily, I'm only investing my own money in that, not other people's money. But yeah, I lost basically 100% of my investment that I made a year ago into Luna.
I thankfully didn't put any money into Luna, more just because I didn't take a look at it. I was super impressed. We had one founder in the portfolio that run a company called Meow, which does treasury yields. And it was, they were getting a bunch of pressure from investors, from the people who put their money with Meow to put money in Luna, because people were like, I want this risk-free 20%. And to these guys' credits, they're like, look, we looked at it and it just doesn't make sense. And our number one thing is principal preservation. So I do think that like the people who took the time to understand it realized that it was an issue. And I mean, there's like obviously rumors that,
but all these things are issues. Like Bitcoin is a very risky asset, and so if you've been fortunate enough to take that, invest in Bitcoin at 1,000 or something like that, or even lower, like you took that rise up, it's that all could go to zero tomorrow, right? So these are very, very risky assets to put money into.
I bought Bitcoin at 100 and then I sold it at 150. Like
there you go. Right. So you have the other problem of just selling too early as well in these risky assets. There's been all of this crypto enthusiasm, and then there's also been these crypto scams and these other types of things. Like, how do you, when you're looking at like some crypto project, you mentioned DAOs or these NFTs or these back in the day they had these ICOs, or so, like how do you figure out like which ones to get excited about and which ones? There's a lot of like murky characters in the crypto world.
Yeah, I think it's really, for me, a big kind of network thing, right? Like, so I'm investing alongside a bunch of people that I know and trust. People particularly, I think, are valuable co-investors for me, or people who have technical teams on staff, because all of the contracts are open, the code is open. So people can go in and evaluate whether this thing is real or not. And then you have to make all of the other guesses about what's adoption going to look like. And are people actually going to want like all of that other stuff? But I think there's even a bunch of projects that came out over the past couple of years where the code wasn't good or secure, or it was a Ponzi or X, Y, or Z thing where smart people can diligence that well. I've been really lucky. I got obviously a bunch of concerned emails from my LPs when things started falling apart. They're like, we invested a bunch in crypto, didn't we? And I've only had one company decided to shut down. They gave most of the investors money back. They just couldn't find product market fit. But there haven't been any scams or anything like that. I kind of avoided DeFi just because I didn't understand it well enough. And so I was looking for things that would potentially have real utility for people. And I think one bit of optimism for the crypto space in general is that most of the companies that I invested in 2020 and 2021, products haven't hit the market yet. I think there's this like weird bias because a lot of companies rush to market to get in on the bull rush over the past couple of years. And so a lot of the stuff that was actually in market were the ones who were like, screw it, we're just going to go to market. Product isn't perfect, but we're just getting out there. Whereas I think a lot of the things that really excite me are going to take a couple of years to really develop and get right and get out there.
Now, how do you, what you mentioned DeFi, like this idea of being able to loan out my Bitcoin and getting some sort of risk-free, even if it's just a few percentage points or something like that by loaning my Bitcoin. So just like you would put in a deposit, you'd put cash in deposit is kind of exciting and interesting, right?
Yeah.
If you're long Bitcoin anyway, or long Ethereum anyway. But my main worry was, okay, these institutions like might take my Bitcoin or go out of business or get hacked or something like that. So you might trust your Coinbase vaults, but you might not trust like some secondary institution. But Coinbase doesn't yet do DeFi. So how would you advise people to like wade into some of those worlds?
No, this is not financial advice, and I'm the wrong person to be asking about how to wade into DeFi. There is a company that we invested in called Exponential DeFi that is now putting out almost like the equivalent of credit ratings on a bunch of different DeFi protocols and ranking those protocols based on a combination of yield and their credit rating.
Yeah.
And so it does make it a lot easier that you can also like plug in your wallet and it'll tell you what kind of risk you have in yours and be like, oh, I guess I had LooksRare tokens from when I used the app and that was a C, but most of the other stuff that I had was an A. So I think like there is that extra level of thoughtfulness that you should put in, but
so it's like a Moody's for crypto, really? Okay, that's kind of cool.
Yeah, I don't even know if like legally we could say it's like a Moody's or even a credit rating system, but they do just like they look at the contract, they look at a bunch of different factors and understand like, are you likely to lose all of your principal if you do this thing? And they back tested against Luna and it didn't score well, so that was a good proof point. But I don't know. I do think part of the fun of it is not doing it through a centralized institution and actually like getting your wallet, plugging it in and participating directly in the Web3 ecosystem. So I would do something like that as opposed to a centralized institution and then run it through something like Exponential to make sure that you're not just making a rookie mistake and investing in something that'll lose you all your money.
Now, we had Congressman Jim Himes. He was on this World of DaaS podcast recently, and we talked about his proposal for a U.S. central bank digital currency, a CBDC. Like, do you think a CBDC is viable? Do you think it's a good thing?
I think it's inevitable.
Oh, really? Okay.
I think whether that's this year, whether that's
I think U.S. one as opposed to Swiss one, or it's a Singaporean one or something like that.
I mean, I'm just a general believer that more things are coming online, and I do my taxes every year and interact with the government and understand what a huge pain in the ass that is. And so if they can build on new infrastructure and make that stuff easier, I think that's great. Obviously, there are worries about surveillance and government being able to seize your money more easily that way. So a ton of issues. I do think that it's inevitable that at some point the government's going to get on board and do that. I also think, so I wrote a long piece on Circle and USDC, and their house view is that the two kind of worlds, the central stablecoin and the decentralized stablecoin, are complementary to each other, or at least can kind of both exist at the same time, where the CBDC would be more domestically focused, something like USDC will be more international and borderless and permissionless and all of those things. But if you generally believe that more things are getting digital, then I think it's easy to make the leap that at some point a paper dollar will turn into a digital currency or a digital dollar.
Now, you put out a really cool piece that I love. It's called "The Good Thing About Hard Things," where essentially make a case for investing in companies that are working on harder problems or working on spaces that don't have an established roadmap. There's a small number of well-known venture capital firms like Founders Fund, Lux Capital that have been like really focused on this, but it does seem it's pretty rare for a venture because it's so exploratory. Like, where do you see the next wave of like these really huge, hard things being built out?
Yeah, I think there's a bunch of different categories. I mean, defense, manufacturing with reshoring, space. I had the guys at Payload Space write this incredible like 11,000 word overview, and there's just so much cool stuff happening there. Biotech we've talked about, but I think there's a bunch of really interesting stuff happening there as well. There's something, and I haven't formulated this into like a real thought yet, but it feels like there's just so many cost curves that are coming down precipitously. I mean, energy is another category here. So many cost curves coming down precipitously to the point where things that didn't make sense before now make sense. So if you look at in space, for example, like the big thing that everybody talks about is what SpaceX has done to launch costs already and what Starship will do to launch costs. You look at the cost of sequencing the human genome and how precipitously that's declined. And you look at most of these hard startup categories, and there's some cost curve like that happening. Defense is probably a little bit different, where defense is more based on the fact that the DoD is starting to work with startups and getting willing to work around the cost plus model and do a model that's more familiar to a traditional non-defense prime company. So there are different factors in each one of these spaces, but I think a really big one is that a lot of these cost curves are just hitting a point where these businesses now make sense.
Now, if energy, there are times, especially let's say in the middle of the summer in like a place like California, where the energy price goes negative because there's just way too much solar and you got to, they're basically paying people to take it off the grid. You could see a scenario where like energy prices get cut by 10x or something, and they're 10% of what they are today. You could even see where they're 1% of where they are today. If that happened, if energy prices get closer to zero, like what innovations would that unlock?
Well, I mean, I want the flying car, and that's different than the solar thing, because you're not going to power a flying car with solar. But I think it makes manufacturing cheaper. I think it makes running huge GPU farms cheaper. I think it just makes all of the physical things that we do cheaper. I'm not smart enough to know what entrepreneurs are going to do when,
like, to me, this is like one of the big gating factors to innovation is the cost of energy. And it doesn't seem like we're doing enough. Like sometimes we take out, we put a new cool energy on, like we take another source off. To me, it's like, no, let's get every source on there to lower the cost of energy. But maybe over time, something doesn't become competitive or whatever it might be. And if it's polluting the environment, okay, let's add in some costs to if it's coal, like, okay, well, great. Now you have to pay for your pollution things too. But I don't want to take things off. Like, I want to get more and more stuff so that we get really, really cheap.
Totally. More and more stuff, really, really cheap. Robots make more, like all these things that like are actually good. There's this great new Noah Smith article on that cited a couple of papers that said that actually robots lead to higher wages. Automation leads to higher wages in factories where there are both human and robot workers. And so it's pretty clear that to get deflationary, we'll need a combination of both. More automation will be easier with energy, materials will be cheaper. Like just everything physical gets cheaper and we can start innovating in the physical world again. So to me, that's such a huge one.
One insight that I found super interesting on that piece you wrote, The Good Thing About Hard Things, is that in a lot of category leaders that we consider like very of the moment, like SaaS and the cloud, the leader is actually a much older company like Amazon, Adobe, Intuit. Like, why do these companies have so much staying power? Because in the technology world, you would think there's just a lot more destruction that would be happening.
I think so. I was a big, as an early Slack user, I was a big Slack bull, and I think I probably got saved on that long by the Salesforce acquisition. It was so interesting seeing Microsoft Teams compete. I used the product. It was an inferior product. Everybody that I talked to who used Teams didn't enjoy using the product, and it was stealing market share
Because
from
it was
Slack
essentially free because it's bundled into whatever you're paying for, right?
because it
Yeah.
was bundled into whatever
Yeah.
you're paying for. And I think that that distribution advantage, and obviously there's specific cases in each one of them,
Yep.
but the distribution advantage is probably the biggest one. With something like Intuit, there's regulatory capture. And so there's just a bunch of stuff that happens when you've been around for a while. You're in all of the big buyers and you're able to add new products and sell new products through those channels that I think is just really hard to compete with. They also are super acquisitive. And so things that start to pose a threat, they can easily afford to buy. So I think there's just a bunch of factors like that. But you're right. If you look back, if you started 20, 30, whatever years ago, you probably wouldn't have assumed that it would be all of the same companies that would be a lot of the biggest and most valuable public SaaS companies, but that seems to be the case.
One company obviously that's extremely valuable is Microsoft, and Azure is just amazing. But you wrote this great piece on Excel. And I think if you rewind the world 20 years ago, you could see a world where like Excel would actually be the dominant platform and everything we would be doing was somehow be interacting with Excel and using Excel. Like, what do you think Microsoft could have done differently? Like they could have been like a multi-trillion-dollar company, you would think.
Yeah. I mean, I think there's the obvious one, which is they were too slow to open up and get to the cloud and do all that. And
Yeah.
Satya Nadella
Yeah.
fixed
Excel
a
was
lot of-
very desktop focused for too
Excel
long. It
was
wasn't
very
cloud
desktop
focused. Yeah.
focused. Exactly. So I think that was a big one when a lot of the other, a lot of the big data platforms today were coming up. Excel was Excel and it did what it did.
Yeah.
That said, today, I mean, I guess two different sides of this. Today, I just saw a poll that somebody put out on Twitter that asked people where they deal with their crypto data. So like if they want to do more than just look at a dashboard, what do they do? And there was Tableau, Looker, Sheets, Excel, and 71% of respondents said Excel. So I think a lot of people still
Excel is still
the
the dominant. Yeah.
It's
still
the
amazing.
dominant one.
Yeah.
The other piece of it is just like, I think the beauty of Excel is it knows what it does really, really well. And there's a lot of hacks that people can do and extensions that people do with it. But like that core use case of financial modeling and dumping a bunch of information into a spreadsheet and doing something with it there for someone who's not technical and doesn't know Python, like that use case is just like that focus has made Excel what it is. I think if they had, under the wrong leadership, tried to rush to the cloud and then add a bunch of stuff in, I think they really could have bloated and diluted that product. And so I'm almost happy that it is what it is right now still.
When I first learned how to code, like Microsoft had another product at the time called Access, which was this database, which was amazing. And then at some point, 20 years ago, they just kind of shut it down. And it was a real blow to me. Like it was kind of like a precursor to like an Airtable or some of these other things. And I also thought that was a big miss. Like somehow they could have been able to develop that more as well.
Totally. It is interesting though. Like when I was writing about Replit, like looking at just kind of the competitive landscape in the coding tool space, how much of that Microsoft owns. I mean, VS Code, particularly with the GitHub acquisition, now they're at the forefront of
GitHub was an
AI.
incredibly good acquisition.
Incredibly good acquisition. There was actually in Ben Thompson's interview with Nat Friedman, Daniel Gross today, he talked about how that acquisition came about. And Nat Friedman, after getting acquired, I guess his business.
Right, Xamarin, right? He was at Xamarin. Yeah.
Yeah. So after he got acquired, he went to Satya Nadella and said, "Hey, I think we should acquire GitHub." And like a couple weeks later, Satya was like, "All right, yeah, let's acquire GitHub." And it's like it's that easy. And he said that Satya's genius was that he just like really kind of had a big vision for the company and was willing to kind of take on those bets. But it is amazing how much of the coding space Microsoft kind of like under the hood owns.
No, you have you have a lot of great quotes. One of my favorite quotes from you is essentially, I think it's just something like, the danger of being a good writer is that you can convince people a good idea is a bad idea, which kind of goes to our pessimism, optimism, where these smart people can be pessimistic and they can kind of like really change the way you think about something maybe you should be optimistic about. Like, how do you either guard against that and how do you unpack that?
Yeah, or vice versa, right? Like, I mean, I think with me, the bigger risk is that I'll get overexcited about something and say
True.
a bad
Yeah.
idea is a good idea, and not even to mislead people, but just because I think that it's a good idea. And I want to, I try to express to the audience, like almost to think about the things that I get excited about as a portfolio of venture bets. Where like not everything is going to work out, obviously, but I think that among the things that I write about, it's going to be, there are going to be some things that end up being really important and worth knowing about. But yeah, on the other side, how do you guard against really smart people being pessimistic and arguing that things are bad? I mean, I think first things first is just being aware that that's kind of the natural bias, trying to find other inputs. Like I mentioned Noah Smith already, but he's been on a heater recently. I think I've enjoyed reading him talk about a lot of these categories, listening to Patrick Collison and Tyler Cowen on the progress study stuff. Like I would just put equally smart inputs in on the other side
Sure.
and just get a fluency with the issues that you care about. And you can't do it with everything, but get enough of a fluency with the issues that you care about where you can now see things that before you would have been like, oh man, that's awful. Now you kind of like know the history of the particular pieces of that debate, and you can understand where each side's bias is playing in. That's been valuable to me as I've started to kind of dive into a bunch of different topics. There are things now that I'll see and be like, oh, of course, that's based on this thing, which I actually don't agree with. And so let me go find other data that maybe disagrees with it. I think probably a lot of it comes down to figuring out almost at least like what an updatable core belief that you have is on something. And then you can see if things agree or disagree with that.
One of the things I think is really interesting going on right now is for certain businesses, we're in an inflationary time. And so for certain businesses, you're just seeing this massive inflationary spike. If you run a fast food restaurant right now, all your ingredients are going up, your rent is going up, your employee costs are going up massively. They might be going up 30-40% over the last year or two. So you're just seeing these massive costs go up, and of course you have to raise your prices and do a bunch of other things to stay in business to keep with the times. If you're running a tech company, it seems today everything is deflationary.
Yeah.
Your actually software engineering prices of the average software engineer are going down because they're used to getting paid in stock from like Facebook and Netflix. And so if you're competing for those software engineers, like their full salary has been going down a great deal. When you're buying other software, it's going down because you can negotiate it more. And like for a company like SafeGraph, where I work, like we're trying to buy companies. Okay, well now that's like massively deflationary because the asset prices are going down. So how do you think about this like deflationary system that's happening in today's tech landscape?
I mean, I think probably tech got the most inflated in this past kind of
Before,
like,
yeah,
right?
before
Like,
the inflation hit, yeah.
Yeah, fast food workers' wages didn't go up nearly as much as an engineer's wage went up, and so I think there's just kind of more room to come down there, and I think that's probably a big piece of it.
Right. If you go back to 2014 or something like that, they certainly were inflated a lot since then with the tech. Even the asset prices have gone up a lot since then.
Exactly. Because I mean, and those two things are related, right? Like if you're Facebook, you're printing money hand over fist, you're worth $1 trillion. And you can reasonably argue that any really, really, really great engineer might actually like move your stock price 0.01%, which is millions and millions of dollars. Like you can afford to make these kinds of decisions that don't make sense in this environment. I think, and this is where I guess being a writer and also an optimist, like I can make an argument. I would make the argument this is like a really unbelievably good thing, both for those companies themselves. Right before we got on, there was this great exchange on Twitter between Postmarket and Gavin Baker talking about one of the things we're going to learn from Elon buying Twitter is how much leaner a lot of these social media and ad-based companies can be and still perform as well or better. And I think that is absolutely true. And
most tech companies are almost certainly like very bloated. Like they could probably have half the number of people and maybe even be moved much faster than they were before, because obviously every time you add a person, it does add bureaucracy. It makes communication more difficult, et cetera.
Totally. So I think after some painful transition period, it could be better for the companies themselves. And then just the fact that startups aren't going to have to compete with people who are making, $600K all in comp a couple of years out of school on the engineering side, I think that's really great. Yeah. So I think pushing people, out to areas where they can make more of a direct impact and feel less comfortable, frankly, I think it's probably a really good thing for the innovation ecosystem overall.
That's right. If you were an engineer, just like sitting at Google could have been a very cushy job. A lot of my friends at Google, they work like 25 hours a week and they get free food and all this
Yeah.
other stuff. And they're getting paid just gobs of money. And so it almost like stopped startups from happening, which maybe I guess is a good thing for Google. They're in some ways like if startups are happening, if there's more innovation, it's bad for Google. It's like a good bet for anti-innovation in a way,
Yeah.
right? So maybe it was a smart thing for them to gobble up all these engineers, but I don't know if it was like good for the world.
It's interesting because like one of the criticisms that is levied against Web3 and crypto generally is that it's taking all of these smart engineers who could be working on something that's great for the world. And if you look at the number of engineers in all of Web3 versus the number of engineers locked in Google, I don't think they publish exact engineer numbers, but like
Yeah.
I think there's probably more engineers in Google than there are in all of Web3.
For sure. Yeah.
And if one of those Web3 things can like change the way that governance happens on the internet and can
Yeah.
give people ownership and like do the things that it's promised, then I actually think it's way better for more people to be working there or now, in AI or obviously in climate, like all these places than locked inside of Google. So I'm bullish on what this means.
Now, Not Boring is a Substack, is on Substack, and a lot of the ways most people on Substack monetize is they have like paid subscriptions, so like a free tier and like a paid tier. But I think you've done something different where you have mostly a free tier and then you monetize through like sponsored content. Like, how did you decide to do that, and how does it work with like Substack doesn't really get the benefit from you either, right? I mean, maybe it does because we're talking about it right now. So
yeah, no, I
yeah.
think that is part of it. Like the brilliance of a model like that is that the more people who are out there writing on Substack, the more it markets itself. But
Yeah,
they're getting no direct financial value from me, which is crazy and awesome.
because you're using their servers, people are going to their website, you're using their email system and sending emails like to have good delivery rates as in cheap and a whole bunch of other things that you're getting the benefit from.
All for free. And
Yeah.
it wasn't intentional. Like I wasn't trying to get around the system. Really nothing that's happened in Not Boring's monetization or just general history was intentional. But when I started out, the plan was 100% to hit a certain size, try to convert X percent of those people to paid subscribers. And X, the range is, I think, 2 to 10%. 10% would be amazing. 2% is probably more realistic that you can convert to paid subscribers. So it's like, maybe I get to 5,000 people and I convert 200 of them to paid subscribers and they're paying me $10 a month. So I'm making $2,000 a month, but then I'm slowing the growth of the newsletter because I'm paywalling all of my best content.
Yeah.
So I either have to paywall the best stuff or write twice as much, which I physically can't do.
It seems like most of the people who I know have newsletters, like paid newsletters, they actually put their best stuff out for free. Yeah. And they put their more esoteric stuff out for paid, right? Because they want to because it does help them get more subscribers and stuff.
For sure. And I actually think that works. So another piece of the decision for me was if you're writing very specific content for a very specific audience, then I think that really works. Like you might want to know what Doomberg thinks today in particular on what's going on in global macro and in energy and all of that. And that specific knowledge is worth paying for. Whereas for me, like a lot of people like Not Boring, but I don't know how many people love Not Boring enough to pay for it, or companies. Like if you see something that your employee submits for Not Boring, like, are they going to pay for it? Whereas, Lenny Verchitsky's newsletter on product, like, of course a company is going to pay for that for their product manager. So I also just didn't think my conversion rate was going to be particularly high because it's more general content. And so all that combined, I just then started experimenting with a bunch of different stuff. So I started with ads when I was about 6 months into Not Boring. Then I had a company reach out and ask if I would do a sponsored post on them. And I was like, yeah, I have no idea what to charge you for that. I think the audience is going to absolutely hate this, but like, let's try it. Yeah. And the audience didn't hate it. And like, actually, I've gotten the posts that I write that are these like sponsored content, which sounds like such a dirty word. I get a ton of really good feedback from founders in particular, because we're going behind the scenes on a lot of these like fast growing startups.
Right. You did one, I think recently on Tegus.
Yeah.
Which I thought was amazing. Like I like Tegus. I use their product, and it's a really great product. but I didn't know the whole backstory.
Yeah.
Like I didn't know about this random venture capital firm I never heard of, which got in at like 4 pre or something, right? So
Yeah.
they have this like incredible investment, which was so interesting. The Santa Barbara venture, right? So
Investment group of Santa
it was
Barbara
just
with,
cool. Like it was a really interesting thing. And yeah, maybe they paid you to write it, and maybe you're more likely to write a positive story, but you write always positive stories anyway, right?
and
So
that's the other,
it's not
like
like
all of
you're
it,
super
all of it
critical of
has to
it.
fit, right? Like if
Yeah.
my Monday essay were always like, these companies are so stupid. And then Thursday I was like, you know what? This one though, this one's pretty great. It's all positive, and
Yeah.
there's enough demand for those. One of the interesting things that's happened in this bear market is that demand for the top of newsletter advertising has gone down with like the general, branded advertising market generally, but the demand for deep dives, which are much more expensive, has stayed consistent. Just I think
Yeah.
it's a more unique product. Um,
And
and
how
one
do
of
you
the
know what to charge? Is it just like based on the number of subscribers you have or something? Or
I've just kind of like, as the audience has grown, increased it from the arbitrary kind of first position. And if I like start hearing feedback after an essay that like, we like this, but it wasn't worth what we paid,
yeah,
then I can think about kind of pulling
because
back.
I
But
imagine it's a lot of work, right? I mean, any type of deep dive, if you're doing like thousands of words deep dive, was it typical you're doing like a 2 or 3,000 word piece or something?
I'd say probably the average on a deep dive is 5 or 6,000. And
Okay,
some of
well,
them have
that's
been as much as like
and they get
11.
pretty deep, right? I imagine it's just a ton of work.
It's a ton of work.
Do you have a
And
research team, or are you doing this whole thing yourself?
I experimented on one essay working with like an external researcher, and maybe our flow would have gotten better over time, whatever. But for me, so much of the process is like starting to write and then looking up a particular thing and then thinking
Yeah,
about a thing
yeah.
that I did before. And so I think a research process like wouldn't really help, particularly with, most of the deep dives that I write are on startups. And so there's not a ton of good content on them out there. And so
Yep.
I'll actually just ask the founder in the beginning to like, just throw the things that you've appeared on or the articles that you think have written about the company well, or a white paper or whatever, into a Google Doc, and I'll use that as a starting point for the research and
Maybe
then
you
go from
send
there.
some emails to the founder to clarify something or
Yeah,
whatever. Yeah.
I'll interview the founders, I'll interview people on the team or customers or whoever else. But yeah, there are a lot of work. The feedback always ends up being really positive on those though. And I think they work better than even like a top of newsletter thing, even for the price, just because they can do so many more things. Like they work for recruiting. Stripe, I didn't write about sponsored, but told me that like the piece that I wrote on Stripe was part of their onboarding package. And that happens in
It's
a bunch of
awesome.
companies.
Yeah.
A lot of people say that, it's the first time that their parents understood what they actually did with their lives. And so like, there's just like all these other things that it does other than, and
Yeah.
in addition to driving traffic, that I think makes it worth it.
And how do you like, I mean, I count it as a massive success in a week where I could like read all of the not borings. I could read all my Matt Levine articles that come in, et cetera. Like it's a lot of information that's coming at you. I love like Slate Star Codex and
Yeah.
some of these other stuff. Like, how do you decide? Okay, like I'm sure, I mean, you're more in the business of like reading, but there's an infinite number of things to read. Like, is there some sort of way of triaging what you do, or?
It's something that I'm still figuring out, frankly. So I got into I think a bad spot for a little while where I would only read about the thing that I was writing about on any given week. And so I would jump from thing to thing to thing and like only go really deep on that thing. And I think it actually made my writing worse doing that. And so
Because you just weren't like just exposing
making
your mind to other various things or history or whatever.
other various things, history, good writing in a lot of cases, because
Yeah.
you're a slave to whatever people write about that particular company. So I did a couple of things. I took paternity leave when we just had our second kid and took a month off and just like read different things than I had been reading, books and articles and just a bunch of stuff that was different. And when I came back, I asked people for their favorite essay that they'd read and got hundreds and hundreds of responses. I think it's like the richest, set of responses I've ever gotten, and just started ticking through a lot of those like great essays that people had written. And I think just reading 50 of those or trying to read a couple of those a week, I think has made my writing better again or feel fresher again just by like osmosis. And so I'm trying to get the balance right between reading the stuff that I always want to read, like Ben Thompson's thing with Daniel Gross and Nat Friedman this morning. I'm going to read that no matter what. Reading stuff from people I'd never heard about, reading stuff on the particular topic, and then reading just like classic, really good writing.
You know, speaking of Daniel Gross, there's like a Daniel Gross, Tyler Cowen kind of question, which is like, what do you do to practice your, the musician practices scales, Steph Curry's practicing his threes or something like that. And I imagine for you, it's just reading, right? It's just like going through and reading other people's stuff. It must be an incredible, like doing that for a few hours a day, every single day is part of your practice.
Yeah, I need to get if I can get to a couple hours a day of reading the really good stuff, that would be amazing. But yeah, every time I read something or read a sentence and I'm just like, oh man, that's really good. Or just like see how a really great essay is constructed and how it surprises you in the middle, or just like there's all these little things that my brain isn't around a data podcast. My brain is not very structured. Like I feel very lucky if I just absorb a bunch of stuff and then it bounces around and then something comes out that I couldn't have kind of expected and that I wasn't trying to recall specifically. And so it really is just like, how do I feed my brain with as much good stuff as possible and hope some of that makes it out into my writing?
Now you're writing like a million words a year, which it just seems like a freaking lot of words, a lot of work. Like do you have any like productivity hacks or tips for people who struggle with those types of things of just staying on it?
Yeah, this is another one of those areas where I wish that I were more structured and like there's just a process that I
Yeah,
had.
do you do like from 9 a.m. to 12 p.m. every single day? I just pens down, I write, or you have
No,
like
we have
Stephen King or somebody's like that, is like that, or
No, we have two kids, and one of whom is 8 weeks old, and the other of whom is 2 years
oh
old.
my gosh.
So
Okay,
that
so
like
that is that's like a whole
my
I
best
don't envy
time.
you. I went through that a while ago. Yeah.
Yeah, my I've always been a morning person, and my like most productive hours have always been like 6 to 9 a.m. and that time is just fully chasing them
Yes.
around.
Yep.
So that's gone. So that productivity hack is out the window. Writing and investing, I think, like as a business and like a thing, go really, really well together, where I can write about a topic, I can meet founders in that space. All schedule wise, they're like the antithesis of each other, right? Where like
Yeah.
investing is you meet for half an hour wherever the founder is able to meet, and writing is you want these big chunks of time.
Yeah. And what kind of chunks are you talking about? Is it I have different friends that are like, when I was coding, I would love like a 4-hour chunk of time. And now probably I chunk everything up to 25 minutes. Like, how do you chunk up your time when you're writing?
I chunk wherever there's spots available in the calendar.
Okay,
Frankly.
guys. So you could write at 20 minutes or you could write at 3 hours. Like,
If I have 20 minutes, I'll probably read something else on it and maybe take some notes. If I have at least kind of an hour, then I'll try to write. More is better. The biggest hack that I found is just getting panicked by giving myself a deadline every week. Like I have to send out on Monday. And so like Saturday, Sunday, I'm writing big chunks of time just because I'm panicked and for whatever reason.
Yeah, you have a
like
deadline. Deadlines are really nice, actually. Yeah.
Really nice. And I wish there was a way to like trick myself into thinking the deadline was a different day, because I just all sit in front of my computer on Wednesday and be like, I don't know, this is like probably a stupid way to say that, and just like really get to in my own head. Whereas Saturday, it's like, I don't know, I'm just gonna write this thing and then
I gotta get it
edit
done.
it. Yeah.
All right, now how much, okay, this is a random personal question, but how much of someone's personality you think is tied up in their name? Like your name is Packy. Do you think you'd be like a way different person if your name was Patrick McCormick?
I do. And this is something that I've never been asked, but that I have thought about a bunch. So I think it's a really awesome question. Packy came about, my dad's side of the family is Irish. I was born Patrick, but I had a little speech impediment when I was young and couldn't say Patrick because of the R. And so I started saying Packy, which is an Irish nickname. And it just kind of stuck. And when I went to high school, I had 6 kids in my 100-person class also named Patrick. And I think just like being Packy let me kind of stand out a little bit there.
It's kind of cool. Like I don't know any Packies. I know tons of Patricks. So yeah.
I mean, I went to an Irish Catholic grade school. And so there was actually another Packy 2 years above me. But other than that, I think I've met like 2 other Packies in my life. But I do think I'd always said like, I'll go back to Patrick when I'm like a middle manager at a big company. And like, that's when like I deserve to be Patrick again. If I'm like doing something weird and different, then I can be Packy. And so I do think it probably actually kind of helped push me in this.
And also if I say like I read Ben or Matt, like no one would know I meant Ben Thompson or Matt Levine. But if I told someone I was reading Packy, everyone knows it's you. I don't have to, it's like, I don't have to give the last name there, which I think is
Yeah,
kind of cool.
It's a nice unintentional, I think it's with so many things and Not Boring, like this nice unintentional thing that just has kind of worked out and fit the whole thing. I think also if I were writing some like very dry thing, Packy probably wouldn't work as well, but the thing's called Not Boring. My name's weird. Like,
Yeah,
the
it's
whole
fun.
thing just,
Yeah. It goes with the, it's part of your brand in a way. It's like, oh, we're gonna have a little fun with everything.
Exactly.
Not take it too seriously. Packy is not like a serious name. It's like, it'd be hard for you to be a US senator, I think. Like it's more like, okay, we're gonna have fun with it. We're gonna roll with it.
Totally. Yeah, I'd be Patrick when I run for, it's amazing that anybody runs for politics. It seems so, Herschel Walker deserves everything that he's getting right now, but like to know that you have all that stuff in your past and subject yourself to this stuff all coming out for what? Like it just, I don't get it at all. So I will not be running for senator.
Okay, good. All right. Well, if you do run, I will vote for you. But
Thank you.
All right, last question we ask all of our guests: what conventional wisdom or advice do you think is generally bad advice?
Man, I think all of it kind of without context, right? Like I think all of it without context can be bad. There's like those, work hard versus work smart debates and like how much time should you work? When should you be optimizing sleep? And I think if you're 20, you should be working your ass off and not optimizing sleep. And I think if you're 35, like you're not going to, or I at least at 35, I'm not going to perform nearly as well if I don't take it easy sometimes and sleep. And I think that applies to so many different things where you're already behind if you're taking, if you're taking fairly generic advice. Like I don't think if you look at the list of most successful founders, for example, you're going to find a lot of people who are like, what did it was like this incredibly generic piece of advice that everybody gives. Like that was what turned me into who I am today.
All right, this is great. Well, thank you, Packy McCormack, for joining us on World of DaaS. I follow you at PackyM on Twitter, and I definitely encourage all of our listeners to engage with you there, and also to go to Not Boring, which I also subscribe to, and encourage our listeners to engage with you there as well. Thank you so much for joining us.
Thank you. This was so much fun.